Alrighty, so where I want to start out is Tesla stock. This is so important I started with Tesla stock here today in this video. The reason being is this stock is an absolute animal right now. We're now up close to 3,300% on Tesla stock. It's another 5% plus move here today. The stock can't be stopped in the short term, right? It's just running its own race. It seems like every day you wake up and Tesla's up again and again and again. You're like, my gosh, like how much longer can this really last? In regards to Tesla, this is an absolute insane move. We'll speak about that, right? Meta continues to run. I felt like this the whole year. I'm like, Meta feels like it wants 700. It feels like it, man, before year end. I don't know if it's going to get there, but it feels like it wants 700. And this one continues to perform tremendously, right? Now up $863,000 on that stock. Palantir, oh my gosh. Palantir, every time you think Palantir is done, right? Every time it has one of those days where it gives back gains, you're like, okay, the run on Palantir is over. It comes back and like sets a new high. I think today's a really good example of that. Palantir was down significantly more toward the first few hours of trading, and I just kind of watched it come back to life as the trading day went upon. Like it's just insane. Like it's one of those stocks you're like, geez, 885% gain on this one now, and this is a stock I only got in 2022. So it's not like I've been in this stock for many, many years, like let's say Tesla or Elf or some of those stocks, right? SoFi continues to be an animal. It feels like SoFi wants $20. Congratulations to all those SoFi bulls out there as well. Like absolutely incredible. Now up 138% on the stock. This one continues to see momentum, and it's really not going to stop here in the short term, okay? Now, the end of the year play has certainly been Tesla and certainly been Palantir. Like it's very simple. Like that's been the end of year play. Everybody's really been piling into those stocks. And you got to understand, like if you're going to play catch up with the market, right? And remember, I explained this to you guys months ago, what was going to happen here at the end of the year. What did I tell you is going to happen? I told you a lot of funds are underperforming the market, right? I told you they're going to have to play catch up to the market. Usually when you have the S&P 500 have a beast year, a lot of funds underperform the market. They need to try to play catch up to S&P 500. So how do they do so? I'll tell you how they do so. Exactly what I told you several months ago. They buy into whatever the stocks are that move the biggest and are likely going to have the most upside in the year end. So where do you pile into? You're going to pile into stocks like Tesla, stocks like Palantir. You're going to play call options, right? You're going to try to get some gamma squeezes out there. That's the playbook you're going to play. You're going to run into those because those stocks move heavily, right? And so if your view is I need to catch up to the market, you're going to buy Tesla, you're going to buy Palantir into year end, hope those ones continue to move, and the more buying pressure that is created in those stocks, the more upside there is, right? And the next thing you know, you can be somewhere in relation to the S&P 500. So then when you go to talk to your clients in the new year and you show them, here's your end of year investment report, it says like something that's close to S&P 500. So your client, your high net worth individual that's your client, doesn't run away from you and say, dude, like why do you underperform the market so much? You know, you just got to kind of be close to it. Or maybe you can overperform it a little bit and they're like, oh, okay, market was up blah, blah, blah percent. You were up that more percent. Good job, okay? You got your 2 and 20 there, right? Now, I could look at the negative side of Tesla, Palantir, these sort of stocks moving, right? And I want to take the negative side and then I'll show you the positive side. You got to always understand in the market, and this is very important, especially if there's any newer investors watching this video right now. Like let's say you're in your first year of investing, like you're a brand new newbie. You're just getting started in this game. You always have to look at everything glass half full and glass half empty in regards to your stocks and in the market in general, okay? So let me take the negative side first, glass half empty, and then we'll take the glass half full. If I was looking at these moves in regards to Tesla, Palantir, these sorts of stocks, right? I could make an argument that they're just rolling, and some of this I actually truly believe too, as a Tesla and Palantir shareholder, right? These stocks are moving huge because of Trump optimism. There's a lot of Trump optimism. It's clear as soon as that election was done, and I told you guys before the election, I said Trump's going to win, right? It's not even going to be close. I called that. And what else did I tell you? I told you that the Wall Street wants Trump bad, right? And I said that's why the market's moving up prior to election, and you'll see it move up significantly after election. That's exactly what we've seen play out, right? So we have Trump optimism, and that's helping those Tesla stocks, Palantir, all those sorts of companies, right? And obviously Elon Musk's relationship, being close with Trump, it's just a lot of euphoria, optimism, positivity, right? 2, retail has money to invest. Retail didn't have money to invest for several years because retail really got devastated by inflation, right? Real wages are now in a good place again, which means retail investors have money to invest, and they're investing it out there, right? And we see that in a lot of these sorts of companies, right? 3rd thing is Santa rally. What I got to tell you guys was going to happen. I said we're going to have a Santa Claus rally. Sure enough, we've had a Santa Claus rally all the way, right? And then, like I told you guys, the hedge funds are going to have to play catch up to the market. Like, I laid all this stuff out for you guys over the last few months, and it's exactly what we see play out, right? And the fourth thing is we have no earnings now at this point in time, right? From any of these major companies. Like Tesla's already reported their earnings a couple months ago, Palantir. So you don't have to worry about earnings right now, right? And so you get to just kind of run off of optimism. You get to run off of hope, those sorts of things, right? Excitement. You don't have to worry about what are the numbers. No one's worried about numbers right now. It's just there's a good feeling in the market, right? Now, after earnings, we can get a big snap back to reality, right? Because once we get through the new year, Trump's going to be in office, right? Next thing you know, then the market starts looking for the next thing. Then we start talking about earnings again. Then the numbers start mattering again. The margins, the revenue growth or shrink, right? All that stuff starts to matter, so we get snapped back to reality. So the way I would kind of put it to you, it's like a kid in summer break now. I didn't get to grow up like I think most kids grew up, right? I went to work with my dad out in 110 degree heat, 120 degree heat every day, right? Cleaning pools all summer when I was on summer break. But I would imagine for most kids how it looks like, right? They don't get up at 4 or 5 a.m. like I did when I was a kid. They probably wake up at, 8, 9, 10 o'clock, sleep in, and they wake up, play around, maybe play with their friends, maybe play video games all day. And it's just like this glimpse into this life of not really much responsibility and just like chilling and having fun, right? Then school starts again. And all of a sudden you got to start waking up at 6, 7 a.m. And oh my gosh, whoa, it's getting real again. Now I got to start studying. I got to try to get good grades. I got to try to manage a bunch of relationships with people I might not like, right? You got to deal with the bully. You got to deal with this person, that person. All of a sudden you get a snap back to reality. That's kind of like the market right now. The market right now is in summer mode. It's fun. It's chill. We're just living life. We're running off vibes right now, right? Earnings come, we snap back to reality. And all of a sudden it's like, whoa, whoo, okay. This is real again. Oh my gosh, things actually matter again. Okay. Now, if I want to take the positive side of this story, right, which there's always some positive and negative and everything, I could easily take the positive as well, right? With you look at Tesla, you could say, well, yeah, it's moving off optimism and all this stuff. It's true. But also, you see something like what came out last week, and this could be seen as a massive positive for Tesla. This is looking at market share in San Francisco for Waymo, Uber, and Lyft. And what we've seen is Waymo absolutely take off like a rocket ship over this last 18 months, right? Now, you might say, okay, that's just one market, San Francisco, big deal. What happens in 5 years when Waymo, Tesla, these sorts of companies are in all these different markets? What do you think is going to happen to Uber's market share, Lyft's market share, and what do you think is going to happen to Waymo and Tesla's market share? My guess is if we look out 5 years from now, 7 years from now, certainly 10 years from now, Waymo and Tesla are likely dominating, and then Uber and Lyft are, I don't know where Uber and Lyft are. That's a big problem with Uber and Lyft. We just don't know, right? Especially 10 years from now, we don't know. 5 years from now, Uber and Lyft are still going to be around. They're still going to be relevant. 10 years from now, I don't know, right? So that's a problem with those two stocks. But what we do know is Waymo and Tesla are likely going to command massive market share as robo-taxi fleets take off over this next 3, 5, 7 years, right? And the market share they can grab will be very quick. Because at the end of the day, if one offers you a ride for $10 and the other offers you a ride for $20, and also expects a tip, what are you going to choose? We know what everybody's going to end up choosing in the end, right? Which is exactly why Waymo and Tesla will end up taking the market share. Now, additionally, this is very important. People don't understand why Google stock's moving up so substantially right now. They're like, oh my gosh, it's up 26% in the past 3 months. It's moved up heavily over the past few weeks. They think it's something to do with the quantum computer. Ask anybody that knows anything about that technology on a high level, and they will all tell you that technology is going to be awesome someday, but there's no real world applications for it for at least 10, 20 years out. So that's not why Google stock's moving so huge. Google stock's moving so huge because of this chart I just showed you. And people are realizing this could be $1 trillion opportunity. Some are even saying $5 trillion opportunity for Google. I don't know if I want to go as far as to say that, but there's no doubt it's a massive opportunity for Google as Waymo gets in more and more cities, and they seem to be expanding pretty rapidly. And imagine as they take that market share, right? And there's a lot that can happen inside those cars in terms of advertisements. And obviously, who's the biggest advertising network in the world? It's Google McDougal. So there's a lot of opportunity there, right? And then if there's, millions, tens of millions, hundreds of millions of people going on an app every day to catch a ride somewhere, it's just another way of feeding them more ads. Oh, and then if you know where they're going, right, then you can also feed them ads from competing places. You know they're going to that restaurant over there. Why not give them a coupon? Why not another restaurant give them a coupon to this other restaurant, right, to try to steal them away, right? Hey, we got buy one, get one free appetizers today, whatever. There's a lot that can happen here over the next decade in regards to Google. That's why Google stock's moving up so huge, because people have kind of discounted Waymo, and now all of a sudden they're realizing, oh, wait, no, this is actually a crazy big opportunity here. And that's why Google just continues to catch a bid, and likely will continue to for at least the short term here, right? Tesla. If you're wondering why Tesla's catching a bid right now, it's up 99% in the past 3 months. It has nothing to do with auto sales. It has nothing to do with energy sales, anything like that. Tesla's catching a bid right now because we're in a very kind of euphoric market, and you see stuff like this data and people are saying, oh my gosh, like where could Tesla's market share be 3 years from now, 5 years from now? Like maybe this can happen a lot quicker than people realize, right? This is what's going on out there now at this point in time, right? How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook? How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. Stock will continue to rally in 2025.
But it still gained 27% this year. So can it keep going? My next guest says yes. He has the third highest price target on the street in 2025 at $7K flat. Joining me on set is Binky Chadha. He's the chief market strategist at Deutsche Bank. So Wells went to
Wells 707. Come on, Wells Fargo. Are you serious?
and 7. This is like The Price is Right. I'd love to know what the difference is or how they get to that granularity. But broadly speaking, why do you think stocks can keep rising with valuations where they are and so forth?
Sure. What I would say, at the sort of highest above ground level perspective, equities are really about the business cycle. I would say the business cycle is going really, really strong. If you take one very simple measure of the economic context, so it's low unemployment, but also at the same time, very strong GDP growth. We've averaged almost 3% for 2 years now, and unemployment is still in the vicinity of 4%. And you look back at history, you will see that this almost never happens. It's happened 6% of the time, and I think the times that it happened previously is very telling. So the first time was for 4 years, from 1965 to 1969. And for those of us who aren't well versed in US American history, that was, what many historians call basically economic nirvana. You have 3 to 4% GDP growth, 3 to 4% real productivity growth. You have basically inflation falling, 3 to 4% real wage growth, reflecting the productivity increases. And the second time it happened is in the 90s. But on both times equities did extremely well.
But that's what I was. So in the 1960s, we all think of that period as one of dramatic social upheaval. So I think the economics gets overlooked. But
exactly.
So the market did quite well during that period of time.
It did extremely well for a long time.
Because the previous analogies many people are referencing are the stretches in the 90s and even in the 1920s. Where we've had years of back-to-back 20% gains. Both of those ended up with spectacular crashes. So your analogy to the 60s maybe gives us some hope, does it, that we can kind of experience these kind of gains without there being a hangover effect?
So the way I think about it is, there's a cycle, and we are at a certain stage in the cycle where I would argue a number of factors, sort of coming together. So for now, I would say the cycle continues. I would say the cycle stays basically pretty strong. I mean, another very simple way of thinking about things, there's very little doubt that basically equities have risen very, very strongly. We are up, basically for 2 years in a row in a very tight trend channel. It's going up at 24% a year. So it will obviously slow or break at some point. But I would argue, and you're absolutely right. I mean, this is not a common or frequent occurrence. It's only happened basically in the last 100 years, 4 times before, where you have sort of 2 back-to-back 20% years. But again, that's really sort of a
Yeah, so in terms of my opinion on kind of the markets in general there, I think this video I put out yesterday, right, is very, very helpful. I put that out on the main channel, Financial Education, for those of you guys that don't follow it. I'm sure most of you guys do follow that channel as well. But, I put a very in-depth 44-minute video together for you guys yesterday on exactly what I think is going to transpire in this market going into 2025 and kind of the flip that will happen and those sorts of things. So if you want a lot of my more in-depth analysis on where I believe the overall market's going, definitely watch that video. That will help you out pretty immensely there. How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. All right, let's get into Uber, Robinhood, PayPal, and RH.
I didn't want it to get lost in the shuffle. You mentioned you were buying more Uber. It's been a dip, just to say the least. Shares are down 25% from the all-time high hit just a couple of months ago on October the 11th. You want to just take us through why you decided now is the time to buy more?
And real quick, let me explain to everybody why Uber stock. So if you're wondering, why is Uber stock just plummeting here recently? The reason Uber stock is plummeting, and specifically recently, is there's new data that just came out. And Andre, who helps me run the private group, shared this data that's very important. For anybody that's thinking about buying Uber or Lyft stock, it's very important you understand this data. In San Francisco, Waymos are in that marketplace, right? And what you've seen recently is Waymo climb to Lyft's market share in a matter of just a year. In a matter of the past year, Waymo's went from hardly any market share to no market share to literally they're already at Lyft's market share. Uber and Lyft's market share in San Francisco is going down rapidly. Now you say, well, that's just one market. That's just San Francisco. What happens when Waymo's in all the different markets? What happens when Tesla has their autonomous vehicles in the market in the next year or two, right? What you're going to likely see is if the trends keep playing out, which is probably going to play out, Uber and Lyft's market shares are going to plummet. Waymo's market share of ride hailing, if we want to call it that, is going to skyrocket. And the same thing for Tesla, right? This is why people are saying, you know what, I don't want to own Uber and Lyft. And people also don't feel confident in Uber's and Lyft's strategy. And you can't compete with Waymo and Tesla long-term price-wise. How are you going to compete if you got a driver in the front seat? You can't. Travis, the guy who started Uber, he knew that. He spoke about that, probably 7, 8, 10 years ago. The biggest expense to Uber is always a person in the front seat, right? And so at the end of the day, if somebody goes to get a ride from point A to point B, right, and they go on Waymo and it's $10, and they go on Uber or Lyft and it's $20 or $30, right? I wonder what they're going to pick. Of course they're going to pick Waymo. That's just how it is, right? And so do keep that in mind. All right, let's get into why JB's buying some more Uber.
There's this weird dynamic going on in the market where they equate everything that's good for Tesla as being bad for Uber, which is really weird because there are no cyber cabs on the road, and there aren't going to be tomorrow or the next day. But for whatever reason, every time Tesla rallies, Uber sells off. So there's this misperception in the market. And they also equate Waymo developments with being bad for Uber, when meanwhile, the number one problem Uber has is capacity. They don't have supply. They want more. They want there to be more potential rides on the road, not less. And they have a partnership with Waymo that they're testing in Austin and Atlanta. And I think it's like a kind of situation where people just don't understand the way this ecosystem is going to develop. They think it's going to be this winner-take-all thing, and all of a sudden, no one's going to need an Uber because there's going to be 20 million Waymo cars on the road. And of course, that's not what's about to happen.
I got to push back against JB. First off, JB and myself, we probably agree on a lot of different things. I've reacted to so many videos of Josh Brown over the years. Last couple of years I've had this channel, right? And a lot of times I'll agree with him on many different subjects. I don't agree with him on this one. Here's why. He's right in the sense of like, yeah, there's not going to be magically, a trillion Tesla robo-taxis on the road tomorrow or Waymos. 100% right. But the problem is, it's death by 1,000 cuts, right? In regards to the situation. The issue is, year after year after year, Waymo and Tesla eat Uber's market share, right? And Uber's market share just gets lower and lower and lower and lower, right? That's an issue. Now, you could say Uber has food delivery, and that's certainly something they have that I think is sustainable more long-term. But the issue is their core business is not Uber Eats. It's not food delivery. Their core business, their most core business is people needing a ride somewhere. And so if your core business just gets eaten slowly but surely year after year after year for the next 5-7 years, what are you going to have left 5-7 years from now, right? Now, the partnership with Waymo, that's something that I think looks good for Uber, but at the same time, the issue there is Google with Waymo, they might end up just going solo. They might not care to really be on Uber unless it's just some sort of advantage to get people to like be aware of Waymo. But then they still might go their own way over time, right? Where people go directly to a Waymo related app and they book their ride that way. So, these are risks, and I'll be going to San Francisco not too long from now, and I'm going to make sure I take a Waymo at some point on that trip, if not a few Waymos, because I want to experience it. I want to see what this is going to be all about, right?
So the stock is 30% off the highs. It's in its worst drawdown since the 2022 bear market and the third worst drawdown since inception. It's 30 times trailing earnings, 26 times forward earnings, way too cheap when you consider the growth rate. The RSI is completely washed out at 28, severely oversold. And if you look back at the average return for Uber 1 year later, following an RSI of 28, it's 48%. So I think the stocks are screaming buy. Goldman Sachs today agreed with me. Their analyst, Eric Sheridan, made it the number one pick, the top pick in the space because of that risk reward that they talk about. Their target is 56% higher than where it's trading, a $96 target.
$96.
Yeah. Here's what he has to say. Uber is mired in a series of short-term debates. I agree. The debates range from inflation and pricing to the rise of autonomous vehicles. I think the bears are on the wrong side. Goldman's expected CAGR is 16% on gross bookings and 39% on EBITDA between the years 2023 and 2026. And after listening to the CFO speak at Barclays earlier this week, I've never been more confident that this company has everything going for it. So I wanted to add to it. It's an average up. My average cost is significantly lower than where it trades, but I don't care. When it gets to 100, which is where I think it's going, I'll have that much more to celebrate.
So here's the other issue with Uber, right? In regards to what will likely be their two main competitors over the next 5 years, right? Their two main competitors have nothing to do with Lyft or DoorDash. Their two main competitors for Uber are what? Waymo, which is owned by who? Google, and Tesla. Here's the issue. How does Uber make all its money? Uber makes its money from what? From rides. Like that's their cash cow business, right? On the flip side, Google, how do they make their money? It's not from rides, it's from advertising. So Google has this massive advertising network. They could easily advertise everywhere they want to possibly advertise about Waymo, right? And get the word out more about Waymo. Tesla could invest insanely aggressively in this because this is such a huge opportunity for Tesla. And Tesla has this incredible balance sheet of, it just keeps climbing. Now it's like, last time I checked, I think it was $35 billion plus of cash, right? And they're likely going to get exponentially more profitable over the next few years because their margins are now looking like they're going to start going back up substantially in regards to cars they sell. And then their energy business continues to boom for that company, and they're going to sell more and more software, right? More and more FSD packages, which on monthly plans or yearly plans is going to help their margins, even more. And as a supercharging network, it's more built out, right? And when I say built out, I don't mean them actually building more supercharger stations. I just mean literally more and more Teslas on that, supercharging, or just cars in general, right? Because they're partnering with other cars. Tesla doesn't need to make bank off this initially, but Uber does. That's the issue. And that's why Waymo or Tesla are likely going to be able to undercut Uber's pricing. And I'm somebody that I would love to buy Uber stock. I love falling knife stocks. You guys know that. And I've owned Uber in the past. I owned Uber many years ago. I like Uber. But it's difficult to get positive on that stock now. I got to be honest with you guys. When you know what's coming over this next few years, and the issue is everybody knows what's coming over the next few years, right? We know, if you go out 5 years from now, I think it's going to be more commonplace that when you go to get a ride, there's going to be no driver in that seat than there is a driver in that seat, right? So that's going to be tough, right? And once again, it's not like Uber gets eliminated overnight. It's just a slow deterioration over many, many years, okay?